Welcome back to Explain the Charts. Today we're diving into the S&P 500, SPY, and looking at what the news is telling us as well as analyzing the chart data. Recent headlines have painted a mixed picture for SPY, with some news sources highlighting a stock rally that's lost steam, while others emphasize potential for future growth. The market saw a pullback on September 25, 2024, with the Dow Jones Industrial Average dropping nearly 300 points and the S&P 500 retreating from record highs. Investor uncertainty regarding the health of the economy and the potential for a recession contributed to the market's volatility. Concerns were amplified by a weak reading on consumer confidence and the ongoing economic slowdown, upcoming presidential election, and escalating tensions in the Middle East and Ukraine add further risk. However, there are some positive developments to consider. China's commitment to revive its economy through increased fiscal spending, property market stabilization, and stock market support contributed to a surge in the CSI 300 index, marking its best week in a decade. Micron's MU strong earnings and upbeat revenue forecast fueled gains in chip stocks like NVIDIA, NVDA, AMD, ASML, and STMicro, STM. Traders are still forecasting substantial rate cuts over the next year, with the CME FedWatch tool indicating a 59% likelihood of a 50 basis point rate cut by the Fed in November. Investors are awaiting Fed Chair Powell's statement for further clarity on interest rate policy ahead of Friday's PCE inflation data, a key indicator for the Fed. These conflicting factors create a volatile landscape, and we'll examine how the SPY chart data reflects these developments. Let's begin by looking at the daily chart of SPY. Right off the bat, we can see a bearish trend, with the price dropping from its recent highs and closing below its 200-day moving average. This suggests a potential weakening in the market, and the recent pullback aligns with the negative news about the stock rally losing steam. Looking back at the last few months, we can identify a key resistance level around 575, which SPY has struggled to break through. This level coincides with the record highs mentioned in the news, suggesting a strong barrier to further upward momentum. Conversely, a key support level exists around 550, which has held the price from falling further. This support level was tested recently during the September 25 pullback, but ultimately held strong. The ability of the support level to hold could be seen as a positive sign for SPY, but only time will tell if the bullish momentum can be rekindled. The next few days and weeks will be crucial for determining whether SPY can break through the resistance level and continue its upward climb, or if it will fall further and break the support level. The news and events discussed earlier will likely play a significant role in shaping the direction of SPY in the coming weeks. A strong economic indicator or positive news about the Fed's interest rate policy could bolster bullish sentiment and potentially push the price towards the resistance level. Conversely, negative economic data or heightened geopolitical tensions could exacerbate the current bearish trend and potentially drive the price towards the support level. Let's zoom in on the 1-hour chart to get a more granular view of the recent price action. Here we see a clear bearish trend with a series of lower highs and lower lows. This trend aligns with the news about the Dow Jones Industrial Average falling nearly 300 points on September 25, 2024. The price is currently trading below the 200-hour moving average, further reinforcing the bearish outlook. Looking at the recent price action, we can see a clear support level around 565, which has held the price from falling further. This level is likely providing temporary support, but it's important to keep an eye on whether it can hold firm in the face of continued bearish pressure. If the price breaks below this support level, it could indicate a continuation of the bearish trend and potentially lead to further downward movement. Conversely, a strong bounce off this support level could signal a temporary reversal of the bearish trend. This bounce would likely be fueled by a combination of bullish news and an increase in buying pressure. Now let's look at the 15-minute chart to examine the short-term price action. The 15-minute chart is quite volatile, with frequent fluctuations in the price. This volatility is likely driven by the uncertainty surrounding the economy and geopolitical tensions. Despite the volatility, we can see a trend of lower highs and lower lows in the 15-minute timeframe, aligning with the overall bearish sentiment observed in the larger timeframes. There are a few key price levels to watch on this chart. A short-term support level exists around 568, which has been tested multiple times in recent hours. A break below this level could lead to further downward movement in the short term, while a strong bounce off this level could indicate a short-term reversal of the bearish trend. However, the volatility of the 15-minute timeframe makes it difficult to make accurate short-term predictions. It's crucial to be cautious and monitor the price action closely, reacting quickly to any significant changes in the trend. Let's summarize the key price levels and our unbiased outlook for SPY. On the daily chart, the key resistance level to watch is 575, while the key support level is 550. Breaking through the resistance level could signal a continuation of the bullish trend and a potential push towards further gains. However, breaking below the support level could indicate a continuation of the bearish trend and potentially lead to a correction. On the 1-hour chart, the key support level to watch is 565. A break below this level could signal a continuation of the bearish trend and potentially lead to further downward movement in the short term. However, a strong bounce off this level could indicate a short-term reversal of the bearish trend. On the 15-minute chart, a short-term support level exists around 568. A break below this level could lead to further downward movement in the short term, while a strong bounce off this level could indicate a short-term reversal of the bearish trend. Overall, SPY is currently in a volatile market with bearish sentiment dominating the larger timeframes. The news and events discussed earlier, particularly the health of the economy and the Fed's interest rate policy, will likely play a significant role in shaping the direction of SPY in the coming weeks. It's crucial to monitor the price action closely, react quickly to any significant changes in the trend, and carefully consider the news and economic data before making any trading decisions.